Hey everybody, and welcome back to another video. This is How to Invest. Spencer here. This one is going to be on Virgin Galactic Holdings, ticker symbol SPCE. They jumped up over 27% today. Have fallen about 0.5 in the after hours, but that doesn't really mean anything considering it jumped up 27% today, up to almost $27. Market capitalization for this one is almost $6.5 billion. And I want to make this video on whether you should buy this stock or wait until it cools off a little bit, or what's really going on with it. So without further ado, let's hop right into it. If we look at the 5-year, because the 1 year doesn't get quite the full chart in here, we can see that it debuted as a SPAC around, it kind of became popular in 2019 and started gaining some traction under the previous ticker symbol I am actually unaware of before they merged with the Virgin Galactic Holdings. But you can see here, you could have picked this up for about $7 in November of 2019, and you would have had almost a quadruple up, which is still quite a good deal. If we go back a year, you could have picked this up in June of 2020 for $15, and you would have had about a double up. So still quite a good deal, but this stock has been quite volatile in the meantime. It has shot up to over $54 and then back down all the way to $16. And keep in mind, SPACs are priced at $10 when they hit the market, so 16 is pretty close to that SPAC pricing where it's back down to the $10 price floor. Obviously, this is post-merger, so you won't be able to get that SPAC redemption for a lot of the pre-merger SPACs, but that is still quite the downward move for this company. Why did this happen? One, because it kind of got way too overheated. If you think of an economy, a stock is no different. If it heats up or gains too much market capitalization and price too quickly, then it's going to burn out very quickly too, and that there's going to be consequences, and the consequence was the stock fell quite substantially because it was just not ready for the gains that it had, kind of outgrew the capitalization. This company is a pre-revenue company, so they currently do not make any money. Most companies on the market make money. Most companies that are in major indices make money. If you're in the S&P 500, you have to make money on the bottom line, so that you have to have earnings for 4 straight quarters or a year. So to be in one of those indices, you have to be profitable as a company. This company is not only not profitable, they do not have any sales yet, considering they are pre-revenue. So that's just another way to put that. But this company is a half space, half retail transportation travel company. They are looking to take customers and consumers up into just above the atmosphere, and then drop them down quite rapidly to create a zero gravity effect, so that you will be floating and it will feel like you're in space. Now, obviously, these will be very, very expensive flights, and they are going after a very niche market. But a lot of people got very excited at this when this debuted, and they found their merger partner back in early 2020. Before the pandemic hit, this was kind of the darling of the stock market. This was just one of those stories that everyone was talking about, and one of those signs that there was some frothiness to the market. And obviously, the stock market dropped quite substantially, and it wasn't due to the froth, it was due to the global health pandemic. But this doesn't show the true volatility. It went from $7 to $39 in a couple months. It was up over $39 at one point, I remember. And people were talking about, wow, I wish I would have jumped in. That was the big easy money play back in the day, over almost a year and a half ago now, before Dogecoin and Bitcoin really took off again. This one, people were like, oh man, I wish I would have gotten Virgin Galactic. Off to the moon, because that was almost the original to the moon meme back in the stock market when a lot of the retail investors were getting in. But today it had quite the substantial move because they had a test run that was successful. So we look here, there's a couple articles on it. It says Virgin Galactic shares soar after successful test flight. So this didn't have any customers or consumers on it, but there was a success that this is possible and that they are capable of doing it at this point in time. So what they just need now is the ability to ramp up production and do this over a long period of time on a regular scale basis. And they also need probably the most important thing, which is the demand. They need people that are willing to do this and actually want to do this. The best thing for this would be repeat customers from obviously people who enjoy this quite thoroughly and say, oh, wow, they go on once and say, I would do that again, even if it's a couple $1,000, couple $10,000. Finding the repeat customers is always the prime in every company that has to deal with directly consumers. But also they want customers or consumers who enjoy it so much that they are willing to tell other people about this. So really the driving factor behind this is the person or the customer, consumer, whatever you want to call it, having a great time on the experience. So they are, I don't really know if this 20%, 27% is warranted because they didn't have any consumers rating the experience from this, but it is just funny to see the move that it made. If we want to look here just how much money they are losing or how much money they have on their balance sheet, they have a $5 billion market capitalization currently intraday, and if we go down here, their management effectiveness, the return on assets has been almost negative 30%, and the return on equity has been over negative 95%, which is never. This one also has quite the high short interest. We look here, over 20% short interest. That is incredibly high for any stock. I always go off the 5% rule. Anytime it's getting over 5%, it's time to notice that, oh wow, there's people actively taking a position to short this stock. 5% isn't the most, but it's the start to where to start to get a concern. Now, shorting isn't always my biggest concern. As you may know, I have stated this plenty of times that shorting creates unnaturally low prices in the short term, which create great buying opportunities for the long term. So if you're a long-term investor like me, who is looking to beat Wall Street and beat just kind of the big hedge funds with time, then you have no problem with shorts because they create great buying opportunities. And once they create these great buying opportunities, they get squeezed out, and the stock price normally grows quite substantially after they get just pushed down artificially. We look at the balance sheet here. They do have quite a substantial amount of cash. They have 616 million, so almost $1 billion for a $5 billion market capitalization. It's about a little over a 10% cash. So when running finance, for me personally, I always like to keep at least 10 to 30% cash on hand. So this business is my rule, but for businesses it is quite different, and they are able to pay down their debt. But since they are pre-revenue, their total cash can always be higher because at this point they are just hemorrhaging money. They have no sales yet, no revenue, so no way to earn money. So that number can always be higher. I like that it is quite substantial for the market capitalization, but like I said, can always be higher. The cash flow statement, they are operating cash flow, negative 225 million a year. So just in 3 years, they'll be out of that. And leverage free cash flow is negative 137 million. So at the end of this video, I just wanted to state, is this stock a time to buy now since it has gone up quite substantially? Do I think that it will keep going to the moon, go back to 50? In my opinion, no, this is not a time to buy now. This was good news that they had a successful test run, but we are still have not seen the demand for this yet. We have not seen a waiting list. We haven't seen any type of reservations to say that, wow, people actually want to be doing this. and we haven't seen the margin operating from this, how much money they're making on each flight. There's just too many questions to be determined about this company. If this does fall again quite substantially, I might be looking to invest because just last week I was looking at this company thinking, wow, those prices are getting quite silly. It was down, I think, again to 16 just within the last week. And that is pretty darn close to SPAC price. For a speculative play, it's a pretty interesting option. So if you guys want to hear more about this stock, please let me know. And if you made it this far, have a great day. Thanks for watching.